How to trade options on futures, Mikey. Covered call, not the sexiest segment here today. Sometimes we'll talk about, selling crude oil and really being cowboys in some crazy high risk trades. Today, I wanted to back it up, show people how to put on a covered call in options on futures, show them how similar it is to doing it in stock and why you would maybe commit this strategy to futures. And I thought a prime place to have this discussion, Mikey, is the metals asset class, because you have a really great GLD gold ETF here. And the covered call works the same as if you were doing an Apple, right, Mikey, where it's just long 100 shares, short the one call. It's really clean. And this is probably one of our favorite commodity ETFs, right?
Yeah, GLD is kind of like the go-to. You can always rely on it. It's always going to be gold. Doesn't necessarily have as much drag as like USO, for example, because I'm pretty sure it just holds physical gold. It's been at least a mainstay in my watch list for the last several years. I've never put a covered call on gold. I'm excited to see how we might go about structuring this and your take on some commodity exposure with short calls.
Yeah, and this is just the same way that you would maybe buy Apple shares when they're beat up and sell a call against it to increase. Covered calls increase your probability of profit. They decrease your risk. I look at this metals market and it's been low key beat up. And I know a lot of people out there are looking for some long metals exposure. And I think this is a go-to, I'll buy the GLD shares. It's a great ETF. It doesn't have that drag, like Mikey says, and I'll sell a GLD call against it. Well, SPRE, the futures here, no drag as well. It goes direct to gold and the small metals that we're looking at today. Also has some silver and platinum exposure in there. Similar setup, right, Mikey? I think a lot of people are looking for big differences between options on futures and stock, but you're just buying one futures contract and selling one call. It's essentially the same thing, maybe even simpler because you don't have different amounts of shares.
So that was my only kind of outstanding question is when I do this with stocks, and I'll let you know on a secret that the covered call is my favorite options trading strategy, favorite investment strategy of all time. When I first joined the Tasty Trade team, in my introductory letter, I said, my favorite drink is a gin and tonic and my favorite strategy is a covered call. But with futures, my outstanding question was always, do I need to adjust the underlying futures exposure? Am I doing it 100 to 1? But it sounds like you're saying it's just one feature, long feature, and then short one call. Super clean.
Yeah, very, very, very clean. And a couple other clean factors here. Here are some differences between stock options and futures options. And you see that variable multiplier on options on futures. With small products, it's 100. And so it's the same as the stock options in there. It's $100 multiplier equating to 100 shares of stock on those options on stock. Variable monthly expiration, smalls, same monthly expiration. It's the third Friday every month. And what's really nice is if I buy the futures and I sell that call, Mikey, and say I forget about it and the stuff goes to expiration and my call is out of the money, but I still have those shares. The nice thing about doing it with options on futures and the futures themselves, they expire the same time and that exposure will disappear at the same time. Because I know a lot of people will, forget about it and then check in 2 weeks later and it's like, oh, my call expired worthless, but I've been just long the 100 shares and I've been having a lot of risk for that period when I did forget. And last thing, but most importantly to a lot of people, myself included, Mikey, is that margin is based on size and volatility of the product. Margin in stock is just based on the price. It's going to be 50 or 100% of that stock price is what you're going to have to pay for the strategy. When you're doing options on futures, it's the same strategy pretty much, but you're doing less capital per unit of exposure. A lot of people love doing stuff like the covered call or the short put or what have you on SPRE relative to GLD, because it's a similar amount of metals exposure, Mikey, but a fraction of the cost. I mean, I've priced it out. Covered call in SPRE is going to cost you a few $100. In GLD, I think it's going to cost you like, given current prices, like $6,000, something like that.
Wow. Yeah. It's a market that is largely inaccessible to buy at least this straight out ETF, to do so thousands of dollars. The biggest advantage I see with options on futures is the capital efficiency. And so glad to hear that you can apply your covered call strategies from stocks the same way as you would on futures. It's amazing.
Awesome, Mikey. There you go. We'll leave it with that. Couldn't have said it better. It's amazing. Mikey, you are amazing for joining us every Friday. Thank you so much. And everybody, thanks so much for joining us all week here. We love our small exchange supporters and community members. Again, go to community.thesmallexchange.com. If you haven't, we are running a great promotion this month for all new members, getting a trader notebook and 50% off fees for life. Had to sneak that plug in. But everybody have a great weekend, but stick around because Splash into Futures is coming up next with Pete Momet. That's a great show. Have a great and safe weekend, everybody. Peace.